welcome to RC Truth Media. Today we're going to be focused on cryptocurrency news, the markets, the dollar, and what's going to happen if the markets crash. What will happen to Bitcoin and cryptocurrencies? Well, there's two options, and that's what this article I'm about to read to you is saying. But before I go on to this article, I'd like to discuss a bit of information that I have went and looked up and spent numerous days researching, and I would like to just go ahead and let everybody know this information because it's pretty important. So since the start of the Federal Reserve, our dollar, the value of the dollar has been going down. You can see from this green line here. Okay, the dollar has lost 98.2% of its purchasing power since 1900, and that was in 2015. They're saying this. Okay, it's lost even more than that now. Gold has increased 53.9 times. Okay, so when the dollar goes down, gold goes up. Okay, and that's what's been happening over the years. So what does this have to do with markets? Let's go and discuss that now. What's the correlation between the U.S. stock prices and the value of the U.S. dollar? The correlation between any two variables or sets of variables summarizes a relationship, whether or not there is any real-world connection between the two variables. The correlation coefficient will always be between -1 and +1, which signify two opposite extremes of perfect correlations. A negative coefficient means that the two variables or set of variables will move in opposite directions. If one variable increases, the other will decrease. A positive coefficient will mean that the two will move in the same direction. As one increases, the other will increase. So what we had spoke about before with gold, that means that this has a negative coefficient. It will move in opposite directions. Okay, it says one variable increases, the other will decrease, and that's what has happened with gold. Now, explaining correlations between the dollar and stocks. For example, if we compared the US dollar, which tracks the value of the US dollar against 6 other major currencies, and the value of the Dow Jones Industrial Average, Nasdaq, and S&P 500 over a 20-year period, as of 2011, the correlation coefficient is 0.35, 0.39, and 0.38 respectively. Note that all of the coefficients are positive, which means that as the value of the US dollar increases, so do the stock indexes, but only by a certain amount. It's also notable that each coefficient is below 0.4, which means that only about 35 to 40% of the stock index movements are associated with the movement of the US dollar. Okay, so we have a positive correlation. That means that the stock market increases, the value of the dollar increases. Okay, so this would mean that everybody would want to put more money into stocks, right? This is an incentive to continually get people to move their money into the stocks. As the stock market goes up, the value of dollar goes up. So we've seen the stock market go up and up and up and up and up. Now, what's eventually going to happen? Everybody puts all their money into the stock market. As right here it says, it continues to go up. There's a positive correlation. Now, as the value of the dollar goes down, okay, and they're thinking they're gaining money off the stock market. My currency is valuing. As the market, the currency gets worth more as they're thinking, right? They said there's a positive correlation, but we see right here, the value of the dollar has actually gone down and down and down. So when these people put all their money in the stock market and the dollar reaches zero at its purchasing power, then all of this money that they're thinking they're building for their retirement is going to be worthless at the time it reaches zero, which is going to be really soon. As of right now, we're under the last 4 pennies of our purchasing power. That means that compared to 1913, the dollar is now worth 4 pennies compared to when it was compared to when the Federal Reserve was first implemented in 1913. Okay, so if you can continue to put your money in this stock market, when the value of the dollar reaches zero, all of that retirement and everything, your savings, all of the money that's in the bank is going to be worthless. Now, what does this have to do with cryptocurrencies? I'd found a great article that goes and puts this all together for you. And this was actually written by Michael J. Casey. He's the chairman of CoinDesk Advisory Board and a senior advisor for blockchain research at MIT's Digital Currency Initiative. You can research this article on Coindesk.com. It says, what would happen to crypto in a global market meltdown? Okay, that's a good question. A common thought experiment in the crypto community is to ponder how cryptocurrencies would fare in the event of another global financial meltdown. It is not an ideal question. There is a host of troubling developments in the global economy: the threat of a trade war, jitters in Italian debt markets, problems at Deutsche Bank, and new emerging market crisis in Turkey and Argentina. What about Brazil? What about China inventing the petrodollar? What about G7 and us continually putting, the United States continually putting tariffs on other countries? What about all these factors as well? Okay. Meanwhile, central banks led by the U.S. Federal Reserve are tightening or signaling tighter monetary policy. That's putting a brake on the huge gains that low interest rates and quantitative easing had bestowed on global markets in the 8 years since the end of the last crisis. Thanks to Obama, he had 10 years of low zero interest rates. With this combination of risk factors already in play, there's always a chance that some unforeseen trigger could set off another terrified rush for the exits among global investors. What would the impact be on Bitcoin and other cryptocurrencies? Would their reputation as independent assets see them benefit from safe haven inflows? Or would the market-wide reduction in risk appetite spread wide enough that crypto assets get caught up in the sell-off? There's opposing scenarios, and he talks about two different scenarios. What would happen? Okay, the first one, some crypto hodlers salivate at the idea of market panic. They contend that unlike the 2008-2009 collapse when Satoshi Nakamoto's newly launched cryptocurrency was out of sight, nowhere to be found, unavailable to the horde seeking a safe haven from the fiat world's chaos, Bitcoin is now widely recognized as a more versatile alternative to traditional flight to safety assets such as gold. In a crisis, they say Bitcoin could shine, as might other cryptocurrencies, designed as alternatives to fiat cash such as Monero and Zcash, unaffected by future monetary policy responses, immune from draconian intervention such as the Cypriot bank deposit freeze of 2013, and easily acquired, they could prove their value as digital havens for the digital age in such a moment. Accordingly, the bull's argument goes their prices would surge. On the other hand, if there's enough of a market-wide departure from risky investments, it's hard not to see this sector being swept up in it. Okay, so if the big investors get out, okay, there's not enough money, they're saying, in these cryptos, that as soon as they get out of these markets, it'll make a huge difference in the price. And we've been seeing that recently. I have another article that says that 40% of cryptocurrency is owned by less than 1,000 people, and they're big players. These 1,000 people have been in it since the beginning. So if they take their cryptos and get out, it's going to make a huge difference in the price. As we've seen during the last few days, this may be one of the reasons why. We also know that South Korea, they have went and gotten, somebody's went and hacked them, and so they're saying this has something to do with the crypto. But it's one of the small outlets over there, so I doubt really that this had too much of an effect in the price. It says right here, where did I read to? On the other hand, yeah, that's where I got to. Just as the most extreme gains in crypto prices in the latter part of 2017 were inextricably linked to the rapid risk on uptrend seen in stocks. Okay, let me read that again. So the most extreme gains in crypto prices in the latter part of 2017 were inextricably linked to the rapid risk on uptrend seen in stocks, commodities, and emerging market assets. So too, a major sell-off could easily infect these new markets. Cryptocurrencies and tokens are perceived by most ordinary investors as high-risk assets. You buy them with the money you can afford to lose when you're feeling upbeat about market prospects. When the mood soars, this class of investment is typically the first to be retrenched as investors scramble to get cash. At 300 billion, according to CoinMarket's undoubtedly inflated estimates, the market cap of the overall crypto token market is more than 3 times its value of a year ago, even though it's down more than the half from its peak in early January. But it's less than 1% of the end 2017 market cap of $54.8 trillion for the S&P Global Broad Market Index, which includes most stocks from 48 countries. If risk-hungry investors are panicking and looking for things to dump, or for that matter, if they're looking for something safe to buy, it won't take much of their funds to move the crypto markets one way or another. That's what I was talking about. So there's 54.8 trillion for the S&P, right? And how much was there in coin market? There's only 300 billion. Okay, and it's definitely an inflated estimate. Now, if all it takes, and these are attached now, these are attached to each other now. So all it takes is these people at the S&P to take out a good chunk, and it's gonna move these. Or if they want to take out a good chunk over here, it's gonna move prices. Either way, we could see prices move. Okay, it says right here there's a low correlation. Backing the Bitcoin bulls argument is the fact that correlations between cryptocurrency and mainstream risk assets, the degree to which prices move in tandem with each other, are quite low. A 90-day correlation matrix compiled by analytics from SIR put Bitcoin's correlation with the S&P index of U.S. equities in minus 14%. Okay, that's a statistic neutrally positive, a neutral position. So neutral. But it looks like a little bit negative to me. So that actually means when the S&P goes up, that the index of U.S. equities, when the S&P goes up, the Bitcoin goes down, barely. That's what that's supposed to mean right there. But they say that in a crisis, all correlations go to 1. The panic state of the crowd, with investors selling whatever they can afloat to cover debts and margin calls, means that everything could go out with the flood. Intellectually, too, that sort of wholesale downturn would comfortably stand as a logical counterpoint to the conditions seen last year when market valuation reached excessive levels. We cannot separate the flood of money that flew into crypto at the end of the year from the fact that 8 years of quantitative easing had driven a hunt for yield in once obscure markets as the returns shrank on now pricey mainstream investments such as corporate bonds. You can go ahead and read the rest of this here if you'd like. And what I'm getting out of this is there's a lot going on in the markets right now, and markets all around the world are uneasy. Okay, and we don't know basically if there's a positive or negative correlation with all the news that you're hearing going on. So I would say, it's basically what we've seen, say, from Venezuela and other countries. When their market goes up, their currency has went down. Okay, so what I see happening with the dollar is the market's just gonna go up and up and up and up and up until it can't go up anymore. But it's just gonna continue to go up, and the value of our dollar is gonna go down. Eventually, dollar and everything in the stock market is gonna be worth nothing because the value of our currency will be worth nothing, and they will have to go and trade that to something that is worth something. They'll have to attach it to an actual wealth. They're going to use something else besides the dollar. Now, right now is actually a pretty good time to buy Bitcoin. It's at a pretty good price comparing to the rest. But as for me, I've got about $1,200 invested in there, and I'm not touching it for a while. I'm going to wait till after the G7 meeting. I'm going to wait till things pass a little bit, let all this dust settle in, give it about another month, see what happens. But it actually, there's a couple articles that say Bitcoin could get cut in half. There's uncertainty all around in the markets right now, so you never know. Take it easy for a while, but if you got that extra money right now, is a pretty good, decent time to buy. Thanks a lot for coming and checking out the video. I hope you got something out of it. Please like and subscribe. You can donate to me at PayPal. I'll leave a link below. Have a great day, and stay tuned. There's going to be more great videos coming soon.